All right, I'm Scott Duke from Wellstand Group. Welcome to our educational video today in our new educational studio on how to value your company. This is the number one question that we get asked, so we figured let's put it out there. We can give people an example of how to do it on their own, and they can find out what their company's worth today. It only takes you about 30 minutes. This video we're going to try and do in 5 minutes. There's a lot of content that's going to be pushed through, so buckle up, here we go. First, a disclaimer. This is not a valuation that you're going to be able to take to the bank. You're not going to be able to build trust with a potential buyer. But this valuation will give you a general idea of what your company is worth, and you can use that for your own personal needs, whether it be figuring out where you want to take your business into the future, or if you get an offer and you just want to know if that offer's in the ballpark, this is a good valuation for those needs. So, here we go. All right, there's a couple things we're going to need to get started. One, we're going to need your financial statements. Okay, the second thing we're going to need is we're going to need to know your NAICS code. This is the industry code the government assigns to your specific sector. And you can get that by typing NAICS code and then whatever your industry is. NAICS code, the example we're going to be using today is restaurant. If I type that into Google, it's going to give me my NAICS code. And the next thing you're going to need is about 35 minutes to complete this. And we're going to need to figure out what your SDE is. And this means seller discretionary earnings. This is the number that we're going to figure out that we can times your industry multiple by. Which brings us to, you're going to need your industry multiple. Okay, so now the question is, Scott, I've got my financial statement, I've got my NAICS code, I've set aside 35 minutes to figure this out, I don't know what the heck this SDE is, and I also don't know what my industry multiple is. Now, some people will think they know what the industry multiple is. They'll say, yeah, when I sell my business, I'm going to multiply it by 5 times, or I'm going to multiply it by 7 times, because that's what people sell my industry for. But that's not necessarily the case, because every industry is different, and then also it depends what you're multiplying. You might be multiplying to your profit, or you might multiply against your revenue, and you multiply against your EBITDA, which is earnings before interest, tax, depreciation, and amortization. Now, what we're doing today is we're doing multiple by seller's discretionary earnings, and this is the number that's used for companies that are doing sales under $2 million. If they're doing sales above that, you're going to start using your EBITDA as what you multiply against. But if you're doing over $5 or $10 million in sales, pony up, go get a professional to do this. You're going to need it anyhow. This is for people, and this lesson's for people that are going to be under that revenue point and are going to be using their SDE. So here we go. Let's figure out what our industry multiple is first, and then let's figure out what our SDE is, and then we're going to know what our company's worth. All right, there's a couple places you can go to get your industry multiple. The sites that we like to use are Peer Comps and Business Reference Guide. They're the easiest, and I find the data is well displayed. So Peer Comps, if you go to it, there's a free trial that you can use, and it's just peercomps.com, and this is the site right here. And you can get started with a free trial, and then you can also use a one-time comp search. It's only $49. And I have a window open here that's already pre-logged into our account. Now I put in the NAICS code for restaurants, and the NAICS code is 722110 for restaurants. And when we do that, it pulls up 258 transactions that have happened. And these are what these companies have sold for. It shows you their annual revenue, it shows you their price to sale ratio, and it shows you what we're looking for today is their seller discretionary earnings multiple. So it also highlights in the chart at the top, which I really like, we can just look at it and we can say, okay, if we followed across here, SDE of these 200, the mean is 2.76 and the median is 2.79. So today we can use the mean as 2.76, and I'm going to head back over to the whiteboard and just put that down, because that is going to be our SDE multiple for the restaurant is 2.76 that we're going to use today. Now you could go a lot further into this, and there's a lot of things that go into that number, and it really does reflect on the growth potential in your industry, how much you've grown over the last few years, your location. There's a whole bunch of stuff that goes that's going to fluctuate this, but for today and for the purpose of this lesson, we're just going to use that number as it sits. And then I like to go to Business Reference Guide to find a comparable. And again, I've got restaurants up here on Business Reference Guide. And if you look at it, it says that here's our EBITDA and our EBIT numbers. And it says SDE, including the inventory, ranges from between 1 to 3 times. So that our 2.76 fits in there, and that's what we're going to use. All right, so now we know our industry multiple, and we need to figure out what our seller's discretionary earnings are, our SDE of our fictitious restaurant. So for this, we're going to go back to the whiteboard. So our SDE is equal to the profit our company makes plus our owner's wages or owner's salary plus add backs. These two are easy to figure out. We probably likely all know what we pay ourselves, and we definitely all know what our company makes at the end of the day for profit. For this example, we're going to say that our fictitious restaurant does $1 million in sales per year. Restaurants on average do 5% profit, so we have a $50,000 profit. And let's say our owner wages are $60,000. Okay, so these are our profit and our wages number. Now, so what are our add backs? Add backs are things that are expenses of the company that aren't actually needed for the company to operate. For example, in our fictitious restaurant, we could have our owner paying for a daughter's wedding entertainment. So wedding entertainment, and that ran through the company as an expense, and it was $5,000 for the DJ. And then he's paying for his daughter's cell phone as well. She doesn't work at the company, but he's paying for her cell, and her cell on an annual basis is $1,500. That's where we're paying for cell. He also pays for his wife's car and runs that through the company, and that costs him on average every single year another $5,000 in fuel, maintenance, rental fees, whatever. And then he also, the last thing he's putting through there is, because it's a restaurant, he's running all his household food. So he's got this food expense that isn't actually the company's expense, and that's another $10,000 that he's putting through. So all those expenses added up, $21,500 of expenses. The company actually doesn't need to incur to operate, but he's charging through it so that he shows less profit and thus pays less taxes. This is quite common. So we're going to add these things together to figure out what our SDE is. So we have our $50,000 in profit, we've got our $60,000 in wages, and we have our $21,500 in add backs, which totals us up to $131,500. So this is how much the company truly makes at the end of the day that the owner gets to put into his pocket. He puts in his salary, he puts in the profit, and he puts in all these add backs that he's actually distributing throughout his family, but it's at the company's expense. So $131,500. We're going to multiply that by our multiple, and that's going to total out to $362,940, and that is the rough estimate of what our company is worth using market multiple and the SDE method. Take that and put it in the bank and you can find yourself a buyer. Thanks for tuning in to our educational video today on how to value your small business. Please remember this is a back of the napkin calculation, and if you are taking your business to market, we highly suggest getting a certified trained professional to do your valuation for you. If you want more videos like this, please tune into our channel, onto our Facebook, follow us on Twitter, all the links will be below. Our goal is to help as many small business owners as we possibly can in North America when they're going to transfer their business so you have a higher success rate. Thanks, and we'll see you in the next video.